Ladies and gentlemen, the S&P 500, the Nasdaq, the Dow, everything is roaring back to life here today. This is something that has been going on. You know, the last couple of days have been pretty good, gotten us away from those lows of 2022. But here today, there is a fundamental change. We got new data and new information and something out of the Bank of Australia that is making the markets very, very excited, and honestly, for good reason. The last time we had the Fed meeting, the stock market was around 420 on the S&P 500. You're 10% lower still now than where we were at the last Fed meeting, and a lot of Fed speakers over the last couple of weeks have been really coming to terms with a slowdown in the pace of raising rates. Maybe we just got the validation that we needed to actually get there. At the same time, a lot of what I said over the last couple of videos is starting to come true. AMC stock well outperforming the markets and well outperforming even some of the best stocks for the day, up almost 10%. Guys, so let's get straight into all of this information. If you guys find value out of this video, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for tuning in, and let's get straight into it. So what I reported to you guys as of yesterday is that the UN was calling on the Fed to basically slow down the rate increases, to really give it a break. And some of the other Fed speakers were talking about monitoring the US dollar, that we could probably afford to take a break in raising rates. And then you have some other Fed speakers that are saying, no, we got to keep raising rates. We got to keep doing it. So it's been a little bit of a mixed bag, but this whole Fed pivot notion is really starting to take hold. And when we talk about a Fed pivot, we're not saying the Fed's going to cut rates. Not at all. They're not going to do that. What we are saying is that the Fed is going to say, hey guys, we're not going to raise rates at this next upcoming meeting. We're going to give it a break just for a minute. And then, hey, then we'll keep raising rates. But we got to let the economy catch up to things, because we don't want to cause damage that we cannot fix, right? When the Fed does this, it takes 3 to 6 months for a rate hike to work its way into the economy. You had a 25 basis point rate hike, a 50 basis point rate hike, and the last 3 meetings have been 75 basis point rate hikes. They have not worked into the economy yet, and if the Fed goes too far, too fast, which arguably they probably already have done, that's going to cause damage that the Fed cannot easily turn around on, right? The Fed can easily cut rates, make things a little bit better, but when you start to get job reversals, you know, job layoffs, things like that, it's pretty hard to come back from it. Now, the fundamental changes that happened today, first things first, Australia's central bank slows pace of rate hikes in a surprise move. This was not expected. This is a surprise move. They are someone that, you know, tends to be in line with what America does, right? The Bank of England was kind of the same way as well. Bank of Japan, kind of the same way as well. If Australia is doing this, then I think it's time for America to do this. And that is something that has made the markets very, very excited today. Something that could possibly happen. Now this is actual data that is fundamentally bullish for the markets, that fundamentally suggest that the Fed could afford to at least stop raising rates for the time being. Now it says job openings plunged by more than 1.1 million in August. That's very good, because what has the Fed been trying to do is cool down the labor market. They're trying to make it so there's not as many job openings for people looking for jobs. Not to be malicious towards, you know, working people looking for a job, but because when there's so much competition for workers, that's when people need to get paid more money. That's where inflation tends to be a lot higher. And if you got to pay somebody more money to come work for you, you're probably going to have to raise prices in one form or the other. That's just how capitalism tends to work. Now, the key points. Job openings in August totaled 10.05 million, a 10% drop from the 11.17 million reported in July, and more than a million less than expected. The job openings and labor turnover numbers are watched closely by the Federal Reserve, which is trying to reverse runaway inflation that has been pushed by the tight labor market. So this is, yes, a very, very positive thing, because eventually give it a couple more months and you're going to be seeing, you know, that labor market really come back into line a lot more. And then you're going to have people saying, you know, is inflation going to even go higher, right? Those inflation expectations will start to come down even more than what they already have. And they've already, you know, come down quite a lot. Now, on top of all of that, you have had some data over the last couple of days. Today, let's go back up here. Today, you have seen the JOLTS job openings. That's what I just went over. A couple Fed speakers, Fed Williams, Fed Logan, and Fed Mester that spoke before the 10 o'clock JOLTS job openings did come out. And at 11:45, you had Fed Jefferson that speaks, Fed Daly that spoke at 1 p.m. And that's going to be pretty much it for tomorrow. You do have the ADP employment change for September, balance of trade for August, and the ISM non-manufacturing PMI, another reading of inflation that the Fed does like to pay attention to. You also have Fed Bostic that speaks at 4 p.m. tomorrow as well. So I think this was really the big catalyst for this week. The unemployment data, the you know, JOLTS job openings, that was the biggest thing the markets are paying attention to. And if the Fed is really data dependent, that does suggest that they could at least slow down the pace of rate increases. Maybe not another 75 basis point rate hike, maybe even a 25 basis point rate hike, or like I said, maybe taking a pause. But this is a fundamental step in the right direction. And like I've been saying, guys, you do not want to be on the short side of equity right now when you're talking about a possible Fed slowdown to raising rates. You simply don't want to be on that side of the story, because no matter what's happening, no matter what inflation is, no matter, you know, what's going on, if the Fed is going to stop raising interest rates, if the markets are going to interpret that as the Fed slowing down, that will be a very bullish thing, regardless of virtually anything else happening. So that's why I've stressed that so much here in the last couple of videos, and hopefully you guys have took that information and turned it into a profit. Now, as far as AMC, the short interest value amount sitting at $679.64 million, estimating short interest of free float sitting at 19.17%, free float out on loan sitting at about 36%, shares out on loan 185.24 million, days to cover 4.39, cost to borrow of 17.63%, and 100% share utilization. AMC stock up over 11% at the time of recording this video, which is a very good thing. And also, you are seeing a 4% positive order value, and I don't think this move is option based. I don't think it's a gamma squeeze type situation. I think it is some people going out and buying shares because that's the best way to play these kind of moves. Yes, but I also think you might have some of those FTDs that are being covered mixed with potentially some small short positions also being covered at the same time. And if we look at AMC on a technical basis, we really held up above this line that I have had drawn out here at the bottom, and it looks like we got a double bottom bounce. So that is a very good thing in my personal opinion. And if we do get a Fed U-turn per se, if the Fed does give us a smaller rate hike or they don't raise rates at all at the next meeting, well, I could easily see us blowing past the 50, 100, and 200-day moving averages over the next couple of weeks. As far as the RSI, that is still on the oversold side at 42.45, but getting back up to more healthy levels, and the MACD is still very bearish, but it's starting to get that crossover. It's starting to look a little bit better. So guys, that is pretty much going to be all for this video. Nice, short, sweet, straight to the point, just like you guys like it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to get totally free stock, Webull, Moomoo, and Public, links down below in the description. And if you guys want to come trade with me live in real time, also link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.